Hello everybody and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. We are here in Amsterdam for a very special presentation coming to you live from the Commodity Discovery Fund. We are here with the author of The Big Reset and of course the founder of the Commodity Discovery Fund. It's Willem Middelkoop. It's great to see the Oracle from Amsterdam here in Amsterdam.
Well, good to see in person finally.
Yes, absolutely. I want to get started with this conversation with a broad question, and that is, what are the main themes and trends you're currently watching in the commodities space that you think more investors should be paying attention to?
Well, of course, commodities is very broad. You have the precious metals, and within the precious metals you have the monetary metals, let's say gold and silver. There's a lot happening with gold and silver, so I think we should focus a bit on that. Then you also have the energy space, oil, gas, uranium. We focus a lot on uranium within our fund. And of course you have the soft commodities, but we don't cover the soft commodities. So, and lithium, you have some specialty metals, battery metals. That's also an important part of our fund. Let's say 50-60% of our fund is precious metals related, 40-45% is battery metals and uranium related.
Great. Well, we're going to dive into all of that then. I want to start with a chart that you posted on X recently showing the valuation gap between gold and silver, and I think it was focusing on gold specifically versus the gold miners. So I'm wondering how you see, because everybody was thinking that once we got to these new nominal all-time highs, here we are at $2,500 gold, that we were going to see the miners go crazy. Yeah. But aside from the majors, we've seen Agnico Eagle do very well, some of the other major producers, but the developers, the explorers, the junior mining sector has seemed to lag the metal itself. What do you think it will take to close that valuation gap?
Well, in previous interviews last year, I've said that I expect the 2000 barrier to be crossed, and then you could expect a run towards 2,500 rather quickly. We're now in that run, but I also said to get a real bull market in the gold-related equities, I think we need to cross 2,500, because then people are getting the message that this is a real new bull market and it's getting very serious. And people will see that the margins will increase quite a bit of the producers. They will see that there's a lot of extra free cash flow to be spent. You'll see a pickup in M&A, and that's starting already. Look what happened with Philo Mining and some of the other takeovers we've seen. So I think we're in the very first inning of the structural new bull market in gold and gold-related investments. And it might take a little while to pick up full steam.
And what about silver? Because we've seen incredibly low sentiment in the space, seemingly very difficult for it to crack and stay above $30 at this point in time. Obviously nowhere near previous all-time highs. And people are throwing in the towel left and right. Let me tell you, when I post anything about silver on YouTube, there's tons of despondent people in the comments just saying they rue the day they ever got involved with silver. What a waste. This metal just sits here and does nothing. Is this low sentiment? This seems rock bottom here. Is this a buying opportunity?
Actually, I'm very glad that you tell me this, because it points to a very solid bottom for silver. And everything runs in cycles, and I think this is the worst we've ever seen. We all know that there's a structural production deficit in silver. Silver mine production, there are hardly any silver mines left because it's a byproduct of lead and zinc mainly. But if you look at total yearly silver mine production, it's just a little north of 800 million ounces. Demand in silver, physical demand, yearly physical demand is growing fast towards 1,300. So 1.3 billion ounces. So there's a huge structural deficit in the silver market. And one day this will lead to a huge spike in the silver price. Why hasn't this happened yet? Well, many of the insiders know that the silver and gold prices are managed because of the selling of paper futures on the COMEX system, but now more and more of the trade is moving towards China, moving towards Shanghai. Even the future market, future trading is moving from west to east. In the not too distant future, we'll see a very rapid rise of the silver price. And actually, it could start any day now if you look at the market fundamentals.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And uranium, obviously you touched on that in your opening presentation there. Where do you see the uranium market position? Because this is another market where there is much wailing and gnashing of teeth on social media. We saw a large correction in this space. We saw equities kind of shoot up for one day on the news of Kazatomprom announcing missing production targets, which is certainly big news in the space. And then everybody who was despondent was now saying, here we go, we're off to the moon. And I was thinking, I think this is kind of a knee-jerk reaction to get that big of a rise in one day. And sure enough, it's been kind of ticking back down since then. Obviously, the long-term fundamentals for the uranium market look absolutely fantastic here. So for me, this looks like a potential buying opportunity as well in the uranium sector. What are your thoughts?
Well, let's step back a little bit. And then a few years ago, I think we've been beating the drum still since 2016, 2017, that uranium was bottoming out, just the way silver is bottoming out now. And warning people that you could see a very rapid rise of the uranium price for fundamental reasons. We have 400 nuclear reactors worldwide producing energy. We've got another 400 new ones planned or being built. So the structural demand for uranium will be very strong. And if you study the supply and demand fundamentals for uranium, you'll see after 2030 there's a very strong and growing structural production deficit in uranium as well. So this has resulted in a first move for uranium from, let's say, $20 per pound towards $100 per pound. We're in a small correction now, but this first leg of this huge rally in uranium will see a second leg somewhere around, I think, 25 or 26, because we are reaching that period where we have these structural production deficits also in uranium.
Yeah, do you think this is a matter of patience when it comes to the uranium sector? Because it seems a lot of people, I was talking to Rick Rule the other day, and he said a lot of people are looking at uranium because of its long-term fundamentals, but yet they're trading it like it's a short-term thing, and that's kind of where the disconnect is happening, is people are expecting the equities to just take off based on the thesis, when this could take a few years to play out, right?
But look at the best uranium stocks, NextGen, Cameco. They've had huge runs already, but investors always want to see stocks go up every day or every week or every month. Well, that's not how the markets work. So we had a very first powerful leg up. Now we're going sideways. Wait for the breakout and then add to your uranium positions again for the next leg up.
Yeah, I think when you buy matters, and also the quality of the companies you buy matter, because a lot of people are out there speculating on explorers without a discovery, and that's where you can really get burned, right?
Oh yeah, we've been concentrating since 2015 on the largest discovery in this space, and that's NextGen Energy. NextGen Energy had a great run. It ran up to a market cap of 5 billion. There's a nice correction now, and that's a wonderful opportunity to add, because if NextGen Energy receives their last permits, and that's very near, very close. Then they only need 24 months to reach production. Once they're in production, they will supply 20% of all uranium worldwide, and their free cash flow could be 2 billion a year. Well, if you have free cash flow of 2 billion a year, the current market cap of 5 billion is still very low. So I still see a lot of upside for next-gen energy once they're in production. And we often know that there's a revaluation of companies before they start their production. Let's say this revaluation starts 12 to 18 months before they reach production. And Chemical, of course, is another strong company with a very strong balance sheet who will benefit of this structural boom market in uranium.
And so I have to follow up on NextGen, and then we'll move on to other commodities, because there's been a lot of controversy surrounding the company regarding the G&A expenses, regarding them sponsoring a racing team. When I spoke to Rick Rule about this, he said it was deplorable, it was disgusting, that's how management chose to use its money, but the deposit is just so good and the economics are just so good. It's such an attractive takeout target that he's looking at as you kind of have to hold your nose and just buy this stock.
Well,
anyway.
we're not in favor of resource companies who are developing stage companies who start to put money into a Formula One sports sponsoring. We don't like that ourselves. But if you look at the value creation by this management team, they build a company from 50 million towards 5 billion. Well, then you have some money to spend on your hobbies. So
right, that's one way to look at it. Okay, let's talk about copper here. We've been hearing all the stories about a huge copper supply crunch up ahead. We saw the Cobre Panama mine obviously run into huge problems in Panama with the government there. I believe that's still ongoing. It's incredibly time-consuming and expensive to bring a new copper mine into production. Now, my issue is that a lot of the thesis behind copper is related to the new green economy. I personally think that's not going to play out. We're not going to go carbon zero by 2050. This stuff's not going to happen, in my opinion. A lot of this electrification of the world is not going to play out like the political elites think it is. However, I think one of the main drivers for copper will be emerging economies. We're seeing, people move into middle class that were previously lower class. That means they want air conditioning, they want a scooter or car, they want computers. All of these things require electrification and copper. What do you see as the main drivers behind the bull thesis for copper?
There's so much at play. I wrote a book 5 years ago. It's called The Tesla Revolution. It's about the big changes coming through many parts of the industry, especially in transport. And I don't care whether 80%, 60% or 40% will drive an EV in 2050. But I know there will be a lot more cars who will use a lot more copper. And with so many people in Asia growing from lower class to middle class, you can expect many more people to use a lot more copper in their homes. So demand for copper will rise. And there's a real risk we'll see serious copper production shortages after 25 as well and growing into the 2030s. And if I look at the current rate of copper discoveries, there are not enough quality copper discoveries around. So it's not that hard to predict that there will be copper shortages coming, and we'll see much higher copper prices. And this also explains why 25% of our investments are in copper-related companies.
Very interesting. So when you're looking across the copper space, are you mainly deploying capital into the big producers at the moment, or are you kind of further down the development chain?
We have two strategies. Our core strategy is to focus on large discoveries. So we focus on the tier 1 and tier 2 projects. Let's say Sol Gold, which still needs to be developed. You have Greatland Gold in Australia, which is a great copper discovery. And then the second part of our portfolio, let's say the other 60% is in exploration and development. The other 40% is in ETFs and the royalty streamers and some of the producers. And in copper, it's just like uranium space. You have a wonderful ETF, which you can use. It's a basket of companies. So the COPX is a great vehicle to invest in if you want to just invest in the copper space. And for the uranium space, you have the URA ETF, and we use both of them to play the sector.
That makes a lot of sense. Let's talk about battery metals, kind of latching onto the same theme of the new green revolution, the new green economy, whatever you want to call it. What are you looking at when it comes to battery metals? Lithium, obviously nickel is another one that appears to have a looming supply shortage as well. Where else are you looking there? You mentioned when it comes to this EV story, you don't necessarily think we're going to all be 100% EVs by 2050, but you do see an acceleration of adoption of EVs. Maybe if you could speak to the hybrid side of the story too, because I think hybrids overall are a better model for a vehicle. Could we see hybrids maybe come to the fore, and what would that mean for metals like lithium?
I think it's quite clear that hybrids will be the most popular outcome of this EV revolution, because it has the best of both worlds. And actually, if you look at the different markets, of course, China is a very EV oriented. They like the smaller, cheaper cars. If you go to the US, they want to have big engines and big cars. So EVs is not the solution there. Europe is in the middle. So I think hybrids will do very well. We need a lot of metals for the hybrids because it's quite complicated, technical. I think it's good for copper. Our favorite battery metal is copper because nickel isn't in short supply. There's a lot of cheap, dirty copper coming from Indonesia. Lithium.
Cheap, dirty nickel, you mean?
Yeah, sorry. Nickel. So nickel prices are very depressed. If we look at lithium, there's a very strong boom-bust cycle in lithium. Currently we're in the bust, but we need a lot of lithium. I think if you look at the batteries and the latest developments, still a lot of lithium will be needed. So if you concentrate like we do on the largest lithium discoveries worldwide, like say by Patriot Metals, those ones will be developed and will be built into new mines. But the best battery metal is copper. Copper is needed for EVs, is needed for hybrids. You need copper everywhere.
Well, let's switch to the realm of geopolitics and politics as well, I suppose, and talk about the crackdown on free speech that seems to be happening around the world. These are the fun topics we like getting into on this show. We saw Brazil cancel X. There's no more X in Brazil. Not only that, but they're threatening citizens with around a $9,000 fine, which is massive for your average citizen in Brazil, for using a VPN to access X, which is pretty crazy. That's basically China, right? In many ways. We've seen the EU, a commissioner from the EU send a letter to Elon Musk threatening him that he must censor his interview with Trump. Of course, the Orwellian crackdown in the UK, where now they're throwing people in jail for making social media posts, and they're even threatening people outside of the UK, will extradite you if you make comments we don't like on social media. Why is this happening in your view at this point in time? Is this a reaction of kind of if you look at it in a positive light from the perspective, I think, of people like us, is this a dying animal kind of lashing out the system that's been in power for so long? Or is this something different? Is this something more sinister? Why are we here? Will this continue? Is there light at the end of the tunnel?
I'm in the process of revising the Big Reset as we speak. And I've been doing some thinking on this topic. And I think since 2008, since the great financial crisis, we actually learned that our way of living in the West, the way we built the system, the US dollar system, we reached the terminal phase of the international financial system centered around the dollar. Countries in the East and the South understand, and they're joining, and they're lining up with the BRICS Alliance. The BRICS Alliance is preparing for a point in time where they can continue to do business without the US dollar system. This won't happen overnight. The BRICS Alliance needs time to build. Even Turkey, which is a NATO member this week, said that they want to join the BRICS Alliance. So there's a lot of stress building within the Western dollar system. And I think governments are getting scared by everything what's happening. They see the huge build in national debt, especially in the US, but also in the UK and other countries. Japan has a big problem. So governments, when they get a bit scared, they are looking for new laws to become more powerful, or to avoid become less powerful and to lose control. So in a way, the words used, I think I like that one. In a way, we are a dying animal, and we need to put stricter measures. We need to invent more and more laws to keep the system afloat.
Very interesting. One thing I've been considering these days is like, we had the crazy COVID lockdown situation where almost the whole world went along with this insane charade, destroying businesses. I mean, the economic damage from this thing, not to mention the social damage. I mean, it's huge.
You even fled Canada.
Yeah, exactly. Where and relocated to the Balkans, where nobody really cared about COVID, which was really cool. Look, I know Mpox, they have to rebrand it Mpox because monkeypox sounds so stupid. Nobody's going to take it seriously. So they had to say Mpox is now a global problem based on something happening in the Congo, I believe, which is pretty interesting. Now, if not monkeypox, some other method, do you think that we could see another worldwide restriction of movement on people for whatever reason, whether we move into a dystopian future where your carbon credits are counted and these 15-minute cities where you're not supposed to leave, or you pay more for groceries or something like that, or that's kind of the more slow grind, or the more sudden, okay, now there's a new pandemic, everybody needs to lock down again. Do you see either of those scenarios being a potential globally, and could that kind of be a bear case for commodities if that were to sustain for a longer amount of time?
Well, you asked for a deep look into the future, and I don't have that crystal ball. At least not that clear, but let's focus on the good stuff. 10 years ago, when I was doing research for the Big Reset, I wrote about two scenarios. One scenario is that the West and the East would join forces and would try to move the financial system, towards a new phase, what I call like a monetary reset. But now, in the last 10 years, since the book was published, actually, you've seen the deglobalization trend, and the West is moving away from the East, or actually you should say the West is moving away from the rest of the world. If you look at the Western Alliance, it's just 1.5 billion people, 350 in the US, 500 in the EU. You have some people living in Japan, Australia. So it's 1.5 billion people. If you look at the rest of the world, the 140 countries who didn't join the West in Russian sanctions, the sanction against Russia, that's 6 billion people. And a lot of these 6 billion people are joining forces within the BRICS alliance. So I don't expect a development where the whole world will choose the same laws or the same approach during a pandemic. And in a way, this creation of the BRICS alliance, which is powerful enough to confront the West, might bring more freedom to us because there's something to choose. And I experienced this myself in Dubai during the COVID. I traveled to Dubai. I could enter a restaurant or a bar without a QR pass. which was needed here in Amsterdam. They always say this is the most liberal city, this is the most free city. I couldn't enter a restaurant here without a QR pass. It was possible in Dubai. So in a way, I felt more free in Dubai than here in Amsterdam. And so that's the positive part.
Let's talk about the EU. I've spoken to a few guests on my show, Tom Luongo, Martin Armstrong, Doomberg. There's a few others who believe that most likely the EU will cease to exist as an entity over the course of, let's say, the next 10 years. So I'm wondering what your thoughts are there. Do you see issues occurring in the EU? Debt is one issue that came up, that the ECB is not going to be able to manage things. What are your thoughts there on the fate of the EU? Do you think it will continue to survive? Do you think not? And do you think the ultimate destruction, I guess, of the EU in the end would be a good thing or a bad thing for humanity as a whole?
I think the EU is so connected to the US that I judge this problem as a problem for the Western dollar-centered financial system. So if we have a huge problem in the US, we also will see a huge crisis in the EU. And that also explains why the EU is teaming up with the US in a way which is getting harmful for the EU. I think some of the politics coming from Washington, where the EU is supporting the US, is actually harmful for the EU. Look what has happened around the war in Ukraine. But I'm afraid that the people in Brussels, our politicians, don't understand the geopolitics well enough, and they keep supporting the US because they fear to be independent. They don't feel strong enough to take their own position. And the demise of the EU has been predicted many times. It hasn't happened so far. I know China would love to see the EU succeed and would love to see the euro succeed, because they don't want to go back to the past where you had all these independent European countries. So the jury is still out whether the EU will survive, but I think it has to. The main problem I'm focusing on is whether the US will survive with the current deficits, which are growing and growing, and this will need to be fixed in a not too distant future.
Well, let's go there then. How do you see that situation unfolding? Obviously, in addition to this mounting debt issue, we're seeing perhaps the most divided political spectrum that we've ever seen in the United States. This upcoming election is just so bizarre. We saw one candidate almost get assassinated. The other dropped out of the race. Now we've got Kamala in there pushing Soviet-era policies. We're going to do price controls on everything. Not only that, we're going to give new homeowners some crazy amount of money. I think it was over 20 grand each. You're buying a new home, 25 grand for you, 25 grand for
Every
you.
New baby, $3,000.
Yes, this is getting out of hand. So how do you see America? You said you're looking at whether that will continue to survive as an entity. I mentioned Martin Armstrong earlier. He thinks the U.S. is going to break up into several different countries. How do you see things unfolding there? And do you think people are going to buy into this price controls and free money? You know, most people aren't very informed about how the economy works, what central banks are doing, etc. How do you see things playing out for America?
If you look for answers, it's always best to look at history. And that's why price controls are not that hard to predict, because they've been used time and again in each and every situation where you have growing inflation and you're on track to reach hyperinflation. But of course the US will play a few tricks to survive. And actually that scares me most, because the US might be tempted to follow a scenario where a large conflict, for example with China, would be their preferred way out. Or there's also a risk that they'll use Trump as a fall guy. If he gets elected, well, let's make him the fall guy. It's very dangerous to point to more specific scenarios, because the future will always be different than you can envision. But we're clearly reaching a very dangerous situation where China is in crisis, US is in crisis, one could say. Japan is nearing an end game. And also the UK and here in Europe will face many very, very serious, maybe life-threatening problems in the next decade. So I would like to leave it there, because it's too difficult and too dangerous to get into more specific scenarios.
Yeah, that makes a lot of sense. Before I let you go, I want to get your thoughts on the energy complex, the oil and gas space. Yeah. Given everything we've laid out here, that there could be problems up ahead for a variety of nations, a potential large recession could be global, perhaps a large correction coming for tech stocks in the broad market. A lot of people who would present a bear case for oil and gas say, well, all these things are basically bad for demand, so they see demand destruction coming up ahead. What are your thoughts on the oil and gas space here? I think approximately 40% of my portfolio is in oil and gas equities. Am I crazy?
No, I don't think so, because if we look at the whole commodity space, there are fundamental shortages arriving in almost every part of the commodity space. And energy is not that different. So the era of cheap oil is over. We've seen peak cheap oil. On average, to produce oil, you need $50, $60 per barrel minimum. Of course, you'll have cycles also within the energy system. And now we are reaching a slowdown for the world economy. You see price of oil trending to go down. But I would be very surprised to see sub $50 oil for a longer period. But as said, it's cyclical, so you can expect, boom and bust, periods of boom and bust there as well.
Well, Willem, this has been a fantastic conversation. For those who want to learn more, tell us about the Commodity Discovery Fund. You said you're revising the Big Reset. Very interested to hear when that new version will be released as well, and anywhere else you want to direct people online, feel free.
Yeah, people can find us on cdfund.com. We're open to investors worldwide. And of course, you can find me on Twitter, W Middelkoop.
Fantastic. Well, links will be in the description below for the Commodity Discovery Fund, as well as Willem's X account. So be sure to follow him there. And thank you for joining us today, Willem. It's been a pleasure. Thank you for coming on the show.
Thank you.
And thank you for joining us today. As a reminder, this episode is brought to you by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.